Wednesday, July 10th, 2019, Maneco 64, home of alternative economics and contrarian views. So very important day today for the Fed and especially Chairman Powell. It's his semi-annual monetary policy report to the Congress. He will be testifying today to the House Financial Services Committee. Tomorrow, he'll be doing the same in front of the Senate Banking Committee. Why do I say it's important? And you might ask, you don't like central banks, you want to end the Fed, you don't think they should be involved, but be as it may, they are, and the markets react to them, so we need to keep an eye on it. I personally think it's important because the Fed is losing credibility very quickly, They've cornered themselves, and why do I say that? Well, because they're trying to use a lot of talk. They call it forward guidance. They're talking about an insurance policy by cutting rates. The stock market has been reacting to those comments. We've seen a strong rally in the stock market since the Fed announced that they're going to actually start cutting rates, that they're going to stop the QT, which is the opposite of QE. Yeah, and I think investors and the general public, they're losing faith in the Federal Reserve, and it's getting very, very difficult for them to navigate these monetary waters, so to speak. People are realizing that the Fed is there just to keep asset prices for Wall Street inflated and the private equity world, that they're not there to help the general public, that this fallacy that zero rates or negative rates help the economy has been proven completely wrong, especially in Europe and Japan. And I saw a headline yesterday saying from Christine Lagarde, head of the IMF, who's going to be president of the ECB, potentially, saying that negative rates and zero rates are good for the economy. She's full of it, I can tell you that. I mean, it was a former Dallas Fed president, Dick Fisher, who said that, and I quote, "We injected cocaine and heroin into the system to create a wealth effect." Well, that wealth effect has stayed at the top of the heap, at the 1% on Wall Street. It hasn't flowed down to the general public. And I think the problem now is that the powers that be, not only the Federal Reserve, but the Trump administration, the Obama administration, and this is not political, it's just the political class and the Federal Reserve, they've lied with their statistics about the economy. They've made it look like something that it isn't. And they can't, it's hard for them to justify now cutting rates when you supposedly have the greatest economy in the US. And that's a quote, I think, from Donald Trump. He keeps saying that. The unemployment rate supposedly is 3.8%. Well, it is, but the way they measure it, they leave almost 100 million people out of that statistic. I've heard something that more than half of all of Americans cannot scrape together $500 if they have an emergency. Things are not great. I don't have to tell you that. So I think this is going to be important. And one of the signs, this testimony, of course, one of the signs that the markets are starting to kind of be a bit skeptical about the Fed, and even showing that they've lost credibility, is the bond market. Because if you remember well, up until before the non-farm payroll number that we got last Friday, which was better than expected, right? Bond yields were dropping quite a bit, which was pointing to the Fed cutting rates again. But now, since Friday last week, bond yields have gone up quite a bit, even though the stock markets have been a little bit under pressure. They've topped and they've been going down in the last few days. As I speak here, It's 8:24 a.m. London. The 10-year yield is almost back up to 2.1%. I think we got down to around 193, 194 last week. It's up over 10 basis points, which is quite significant. Overnight is up 4 basis points. And the 3-month yield as well is up 2.5. It's at 2.28. That's saying that the markets are not expecting maybe such aggressive cuts, or maybe not even cuts from the Federal Reserve. So it will be very interesting to see what Powell says today in his testimony. I'm sure they're watching the markets, what it's doing. And the problem is that with the economic data and the markets, he's going to have more and more difficulty justifying a cut. He can try to use the trade wars for it, but I think he's at the end of the road, so to speak. So it's going to be important for all the markets, especially precious metals as well. Precious metals have been consolidating. We did have a very strong rally from mid-May onwards, so I'm not surprised. I still think no matter what the Fed does or what Powell says, in the long term, one has to have precious metals to protect themselves against inflation. And yes, we're told by the Fed that the problem is low inflation, but they don't. They've changed the definition. The mainstream economic class, the bankers, the politicians, they call what they measure as prices, rising prices, inflation. But inflation is the increase in credit and money supply above and beyond what people are saving. And you can only get that, of course, in the fiat currency, irredeemable paper money system. Of course, you can get localized inflation sometimes, like during the gold rush in California in 1849. Prices around the mines and the minefields in California went up because there's a lot of gold around, but it didn't really affect the whole U.S. economy. But yeah. So that's their excuse that we don't have inflation, and that's their excuse to keep pumping the system for their friends on Wall Street, City of London, all the financial institutions, investors, basically the 1%. Federal Reserve will be the key. I've got my mug this morning, my End of Fed mug. It says robbing Americans since 1913 and the Fed. You can get one of these in my Teespring store. There's a link below to it in the description. There's other merchandise there as well. And I'd like to thank all the viewers who have bought merchandise there. It's a bit of fun and it helps the channel a little bit. We've got Billy mugs as well, Billy t-shirts. So it's almost 8:30 a.m. Let's have a look at the markets before signing off. So spot gold right now is down a little bit. It's down just over $4 at $13.92.80. So I still think, yeah, we're consolidating. The high's been $13.98.50 and the low just below $13.90. Silver has been outperforming a little bit, and it outperformed gold yesterday, which is encouraging. It's still, the gold-silver ratio is still highly elevated and it could still go higher, but this is a start. Silver is only down 1.5 cents and it's holding comfortably above 15. It's at 15.09. The low's been 15.04 and the high 15.14. The stock market is continuing to get sold off here. Yesterday, the markets recovered at the end of the day, but the Dow still finished in the red. And this is just an example of what I was talking about, the Fed, and how they're in trouble, in my opinion. It says, this is a headline from investing.com, Asia shares count on Powell to stay accommodative. So that's what the situation is right now for the stock market. And I think it's the same thing. It's not just Asia, but the whole of the world. So the Dow right now is down 72 at 26,709. It's down about 0.25%. S&P as well is down just under a third, down 9 points, 29.70. NASDAQ 100 future is down 27 or a third of a percent as well. What about the currencies? Sterling or cable is at 124.56, down about 0.04 of a percent. The euro is up 0.08 of a percent at 112.17, and the dollar is up against the yen 0.1 of a percent at 108.94. Dollars down against the yuan 0.1 of a percent at 688.94. Crude oil up 1.7% at 58.84. That's WTI. Brent is up 1.25 or 80 cents at 64.88. It's interesting because recently we've seen that when oil price is up, the stock market seems to be rising together with it, and today it isn't. So Powell's testimony is actually at 10 a.m. Eastern Standard Time. 2 p.m. we're actually getting the FOMC minutes from the FOMC meeting of June 18th to June 19th. So that's what we're going to be getting. And that's going to be very important to keep an eye on as well. I will be watching for the market's reaction to what Powell says. It's going to be quite important going forward. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, and you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.